The Indian market is suddenly facing a bout of concerted FII selling and all kinds of selling. The Nifty, which was a tall 18% gainer in 2023, has lost over 2% in January and much of it this week. The small cap and the mid cap indexes, which had gained over 50% in 2023, have done worse than the Nifty this week. And much of this is due to FII selling. What's the trigger for this selling? I have with me one of the best in the business to answer all our questions in this one, Samir Arora, founder and fund manager of Helios Capital. Samir, thank you very much for joining us. And my apologies, I know I invited you for a pre-budget special, but since I invited you, there have been a series of events which have changed priorities for the market. And therefore, let me start with this.
But may I say
selling.
that
Yes.
if I properly understood that you're calling me for pre-budget, I wouldn't have come because there's no budget.
Okay.
It's
there is a vote on account. Yes, there is.
Nobody's interested in that.
No, the bond markets are, incidentally. I mean, the borrowing and all that. Anyway, what's your diagnosis of this bout of selling that we have seen?
So this selling, first of all, let's not call it real selling. First of all, we are also FII, we have not sold. But big picture, some of that selling could be attributed specifically to selling of HDFC Bank for a few days. And broadly speaking, I don't think this is any selling which denotes anything about FII's view of India. By the way, tonight I am flying to US. And there is so much interest in India, and let's see now how the conversion flows for us in the market. But in general, I don't think this Jan selling, whatever you want to call it, is some big number for which anybody should panic on that account, at least.
Okay. But for your take on HDFC, so as you said, the people have sold HDFC Bank. You have a sizable holding in that stock.
So we have not sold any. We have not sold all our funds, including our mutual fund. And, our business model or investing model is such that even this month, even our mutual fund, whose NAV you can see, has outperformed the market after having our number one stock being down 15-20%. But let's look at it beyond that. Let's look big picture. Sure. How do investors expect as returns from the stock market in general, other than some people who invested 1 year ago and think that is normal? You expect 15-18% return per annum from the market. Now, I see that for some small news here or there on any stock, let's say IT stock A versus IT stock B. If IT stock A has done a little better, people will sell IT stock B and buy IT stock A, and in 1 or 2 days make the difference between two stocks. That means one up 7-8%, one down 4-5%. And they make it almost like a year's return in just switching from stock A to stock B. Let us say for HDFC Bank, big picture, if you believe everything has been delayed by a year because the merger benefits and the reduction of the HDFC liabilities to the original HDFC liabilities to deposits and low-cost deposits, everything has been delayed by 9 months, 6 months, 12 months. How much is that worth? It is not worth less than this, for the market has already fallen. And on one piece of information where everybody broadly knew that you are starting with a different slate, you are doing a different mix than other banks, to then compare that this NIM has gone up and that NIM has gone down, I think is beyond normal requirement of this job. I think big picture, you will do sufficiently well in these big banks. We always classify our holdings in 2 categories. One where we want reasonable return but with high confidence. And the other one is where you are buying new things, turnarounds, companies making losses, somebody having resigned, something where you feel that the market is overreacting. Not every stock has to give you 30%. Some of them have to, but some of them are there for steadier return. Still think HDFC Bank is in that category.
Okay. There are a lot of people who are still holding that stock like you are. So what's your take? Would you expect a turnaround in a year? What disappointed you and what are you looking forward to in terms of
I think more than disappointment is you need a little bit more enthusiasm on these calls. These market people are sheeps. They have to be guided. So I think it was bad that I can say it openly, Mr. Jagdishan should have been a call. And number 2, you need a little bit of aggression. You don't need to apologize. You have to guide the market. If you see these other calls of the other banks, What do you think they have done very materially different from this bank? Nothing. It is just that you have to be on the front foot and not be pressurized by the market and guide them. There were a few disappointments in the sense that, there was no need to have this expectation that we can raise this much retail deposits every quarter, because they did do a good job in the previous quarter.
Yes.
So maybe it should have been an aspirational thing that we are hoping to get whatever, that 1 lakh crore or whatever in a quarter or something. That broadly don't make it as a hard, fast guidance. But beyond a point, forget about them. The market also knows that they, all around them, they can see that our Indian economy will grow in rupee terms at 10-11%, that the financial sector will grow 2-3% more than that. That is just the way financial sector grows relative to the GDP, and therefore you are not losing your market share in anything. You may gain or not gain. You are going to grow 15%, 14%, 16%, which is a good enough number. And in between, you'll have some spurts where you will be able to reduce your cost or increase your NIMs again, because the HDFC Bank merger has brought in these low margin businesses, but that is understood. Now look at the other NBFCs, the big one, even look at Bajaj Finance. Where is it growing? It is growing in the low NIM housing finance business.
Yes.
Here this fellow has merged, that fellow is buying, everybody's doing the same thing beyond a point. It is the fact that large companies don't normally grow at 14-15%. You please look at whatever is the best guidance for next year for IT. 10. 9, 8, 11, but it looks like a turnaround. And those stocks are trading 50, 60, 70% higher than 2019 multiples. So, but all in all, our model is different. Our model is you don't put all your eggs in one basket. We have 35 stocks, something goes up, makes up for something else. It's a relay race. It is not an all or none. Every morning I can come and make fun of HDFC Bank, even though it's my top holding. One thing I learned from the market is that people say that stocks go up when you start making memes and make fun about these stocks. So I don't mind making fun of HDFC Bank if that is what it takes to go up. But the point is this over hyperness of taking 10 to 15% delta in moving from bank A to bank B, moving from tech A to tech B. I don't see how that serves any purpose. That is big picture what I feel.
Yeah, but there is also a little bit of worry over the financial sector itself, not just HDFC, because the margins would have peaked. We have seen that sector underperform after really being the flag bearer for the earlier part of 2023. So who was the next flag bearer?
Not really 23, because if you look at the big banks, HDFC Bank, I think, was up 6%, and ICICI was up 10-12%, and State Bank was up.
No, Nifty was up 18. Nifty was up 18 in that sense.
That's what I'm saying. In that sense, these stocks they had hugely underperformed in 23.
Yes.
Although 22 and before, ICICI and State Bank did well for 2 years, and generally over life, of course. HDFC Bank you can't compete with. But broadly what I'm saying is they have underperformed. Now there are other groups that are also underperforming or doing badly in terms of guidance, which is IT and consumer. So do you think levers will grow 12% or the other side, these IT guys will grow 12%? No, these guys will definitely grow 13, 14, 15%, at least as of now we think, or maybe 15, 16. So it's not bad. Now you may say, how can you compare an IT company growth with a financial growth? All that is second level.
No. So in that case, Samir, see, you've spoken about consumer staples, you've spoken about banks, where also the NIMs have, peaked off, and you've spoken about IT. If everywhere it's going to be high single digit, then do you think that the Nifty's gains is not 18% now? It's much less.
No, it won't be. Never. It's never going to be 18 so easily. No, we never say that. The average longer term Nifty or market growth, because sometimes we take NSE 500, sometimes Nifty, will be 13, 14%. And anybody growing 15, 16, 17% is valuable. And then you are trying to buy some of these newer things or different things where you might grow 25%. But the whole market or the big guys cannot grow 18% their earnings this year. No chance. That is 25%.
Okay. See, you also have L&T and Adani ports. And there is a feeling in the market that the government will, in the next budget as well, and see, I'm keeping my budget promise, will also be a capex heavy budget. So you think that therefore it's good to persist with infra stories?
Well, these are the only two infra stories we are willing to have, where there is our confidence that they will get their money from the government. If government or some state government or somebody doesn't have money, I don't have the same confidence in the contractors and these railway guys and all these guys who go into every order with low margins and get their working cycle extended. So big picture, we like these two. But that does not, we don't call it an infra story. These are specific stories and only two that we have.
So you're not buying any of the railways, the power companies. These were the ones that showed a lot of...
Power companies are different. Power companies are different. I meant, we are talking about, because we own NTPC also. But I meant in general, these contractor type, not port, of course. Adani Port
got it.
And it was
bought. But power, you are bullish.
Power, we are bullish. In big picture, obviously, there will be power shortage and all, but these valuations look so, obscene, as if these are the, we have seen this in the past and we resisted and we bought some and left some, which is the chemicals. Because we are not used to having these kind of companies trade at obscene valuations as if they are the new consumer companies or the new IT companies. But in general, we are more diversified than we have been because broadly we don't have IT. And so IT used to take around 20% of the portfolio, and that 20% has gone into different things which previously IT would have taken. And because those stocks have also done as well or better than IT, we are persisting with our negative thing, relatively, if not absolute, but I think also absolute on IT. And therefore, we have more than usual mix.
Okay. No, since you said you're going to be going to the US to speak about the India story, and that's something many investors want to hear. This year, do you think that we can have very good returns? It looks like the US economy, for all the rate hikes, is still in good shape. And in India, this financialization, conversion of bank deposits to, stock market holdings seems to be here for the long run.
What you call very good returns, I call that market should do adequately well and I should beat the market. That is what I call a good year. I don't call a good year that the market is up 25, I am up 20, but I had a good 20% return. I am okay with 16 if the market is 13 because I am a relative plus absolute combo in my mind and in how I think of my year being good. So I think that the market in general cannot have 20% type of return this year. I don't think it can have. It'll have mid-teen kind of return because what happens is after the event, like it happened, when the Bitcoin ETF was approved, after 2 days you found the ETF, the Bitcoin down 7.5% in one day. After this great this thing of Ram Mandir and all yesterday, so the market fall. I have a feeling that after election, everybody will celebrate that BJP is back for technical reasons, for hype reasons, for overexcitement reasons, it will fall first. 5-7%. And every time it falls 5-7%, it takes away basically 2 months of returns. If you're thinking that the returns are 20% in a year. I think if we make mid-teen returns as a market, it'd be a very good year. And we think that has a high probability of getting somewhere plus minus that.
I have two very quick questions for you. One, there was a chatter in the market that Sebi has asked funds with more than 50% exposure in one stock to reveal their beneficial owners, and that's led to selling. You buy that? I mean, the version of...
It may not have led to selling, but it's a big overhang. I don't know in one day whether it could have led to selling because this thing has been going on for 2-3 months.
For 6 months,
So the people or the FIIs who have more than 3 billion would have known or would know by now what they have to do. And maybe they are asking for time or they are asking for exemption or they are asking for waiver. But what I'm saying is it could not have suddenly crystallized yesterday. So, but in general, it's an overhang, and I hope there is a solution to this because there will be many funds which we have, not all investors, but some investors saying every underlying fund in ultimate beneficial owner is a complicated thing. They'll have to take approval from the client first. And
they have excused a lot of funds. They've excused a lot of funds. Sebi has excused a lot of funds. For instance, if you have high ownership in a stock which has no identifiable promoter, like an HDFC Bank, then you don't have to reveal. So there are a lot of exceptions.
I didn't know this one. Okay, whatever.
Okay.
So possible.
So they are only interested that the MPS rule, minimum public shareholding rule, is not a
No, that part I agree. No, that part is easy. That if you have more than 50%. But I thought there's a second rule which says if you have more than $3 billion, anyway you have to disclose.
Yeah. That
So that is more complicated.
That is India's borders. That is funds across India's borders, the Bangladesh, Nepal. That's a different rule.
If you have more than 3 billion, who will have? Maybe a few funds will also have, but mostly it will be the P-note guys.
Yeah.
Because they are aggregating for thousands of underlying investors. Now, there are rules for those guys, but to say each of them who has bought a P-note should disclose his ultimate beneficial owners because he bought 5 million of a P-note, that I think many people may choose to say yes or no. We anyway don't have 3 billion, but India-centric guys can't escape, so they have to do whatever is asked. But others may say, it's too small, but these small things aggregate over time or over different players, and it becomes, and sort of an overhang.
Okay, I'll check out on this P-note thing. I'm not very sure Sebi is after many of those guys. But just to come back to the most important reason why I called you, give me a budget bite. What are you expecting from the budget?
So budget day, I'm not even here. I'm in US, so I won't even be watching. Enjoy it and let me know if anything happens.
You're not expecting some announcements on capex or deficit?
No. I thought you're not supposed to have all these big announcements just before an election. So I don't think much.
You can announce.
There's nothing wrong with that. Whatever is happening is good. You don't need more and more of these announcements.
Fair enough. Thanks a lot, Samir Arora. It's always a pleasure speaking with you. Thank you very much for joining us on Bazaar. Well, that's it of this very delightful conversation. After a break, Chartbuster.